Welcome everyone. Today's video will be part one in an advanced trading series that I'll be doing on my channel where I just go over different trading strategies that you can do. Now, each of these trading strategies will offer different risk reward profiles compared to the simple going long or going short, Bitcoin, ETH, Dogecoin, that sort of thing, right? A lot of these strategies are easy to actually implement once you understand them, and some will be difficult to implement, and I'll go over some of the risks and why you might not want to implement them, as well as why you might actually want to implement them, because like right now we're in a bear market and you have to find different ways in order to make money. And as I said before, like the one I offer today, which is basis trading, it offers a different risk reward profile, which might be very interesting to some people out there. And it's actually quite an easy strategy to implement once you understand it. It's pretty much set and forget. And for some people, it's going to be worth it, others not. So use this video as a starting point and do your own research if you wish to go any further. So to explain basis trading, I need to go into perpetual futures. So if you already know what this is, you can skip ahead forward. But if you're not familiar with perpetual futures, they are derivatives that derive their value from the price of an underlying asset. So for example, an Ethereum perpetual future will closely follow the price of spot Ethereum. Now, people will use perpetual futures because it allows them to leverage trade when it might be harder to leverage trade spot Ethereum. Like a lot of places don't offer it, or you have to have a certain sort of like KYC level, and so a lot of people will trade perpetual futures. So just to go on further, we'll speak about funding rates. Now, funding rates are a key part of perpetual futures. So funding rates help incentivize the price of a perpetual future to follow the price of an underlying asset. So if the price of the perpetual future is above the spot price, you'll have what's known as a positive funding rate. And when that occurs, people who are long the perpetual future must pay a portion of their position to people who are short. So in this example, let's say the hourly funding rate is 0.009% and you have a 100k long position on an ETH perp. Well, then every hour you'd pay 90 cents, and that 90 cents would go to someone who's short the Ethereum perpetual future. Now, if the opposite happens and the perpetual futures price is below the spot price, then you have what's known as a negative funding rate, and people who are short must pay a portion of their position to people who are long. So funding rates help keep the price of the perpetual future to follow the price of the underlying asset. Now, this is because one, it can become too expensive to be in a trade. So we just saw, for an example here, that the hourly funding rate was 0.009%. Now imagine it was 0.12% and you were long 100k. Well, then every hour you'd have to pay $120. And at this point, you might be like, right, it's actually not worth it for me to be long this perpetual future right now. I might as well just close out my position and just go long the spot asset instead of going long the perpetual future, because look how much you're paying. So you'd close out your position, and then that would help push the price of the perpetual future back to where the spot price is. And then the second reason is that it encourages basis traders to come in and bring prices back to normal, because you can take advantage of these funding rates to generate a high yield delta neutral position. So to explain it, I'll just set up a scenario for you here. So imagine the perpetual futures price of Ethereum is $3,917 and the spot price of Ethereum is $3,914. Now we can assume that there is a funding rate of 0.00783% per hour, and this comes out to a annualized funding rate of 68%. Now I'll just cut to a video I previously made on this channel just explaining what's happening here and how you can profit from. Just to show you here what I'm talking about. What happens is you're shorting $400 worth of ETH perpetual futures, and then you're long $400 worth of ETH spot. And that effectively gives you 0 ETH exposure. So in your portfolio, you'll have 0 exposure to ETH, but the total value should still be $800 no matter where the price of ETH goes. ETH could go up, down, sideways. It doesn't really matter because your long and your short position balance each other out, and then your $800 should hopefully stay a stable $800. So the value of your portfolio would be $800 plus whatever yield that you're generating here. So the funding APR is 69.5%, but we're using $800 and $400 will be on drift. The other $400 will be off of drift in a spot ETH position. So the actual yield that you're receiving is going to be 35% roughly. So you're generating 35% APR on stablecoins is effectively what you're doing. The trade that you've created is a synthetic stablecoin. To start executing this trade, what you're going to need to do is go to Drift and then deposit USDC. I've already done that. I've got 400 USDC in Drift right now. And we're going to go to sell because we're going to be short selling the Ethereum Perpetual futures. Let's just do $400. Okay, so let's do this now. Let's press sell. And then this is just the confirmation of the order. Okay, so my position's been opened up and my entry price is at 3,921. I'm going to quickly go to Jupiter Aggregator and then buy some ETH. So I'm going to press swap here. And hopefully I should be getting a similar price. 0.102, 0.10199. So I think I bought it slightly cheaper here on Jupiter Aggregator, which is just fine with me. And so there we go. It was easy as that to set up your delta neutral trading position. And to unwind it, all you'd need to do is close this short position. So you could do it like this. Press close 100% of the position and then confirm it in your wallet. And then go ahead and sell the ETH that you have here as well. So that's how the trade is done. Now I wanted to show you an article here, basically from Lima Finance, and they talk about basis trading and some of the benefits of it, as well as going through a back test that they did. They did a basis trading back test on Bitcoin, and as you can see here, we have the Bitcoin price in red, and then we have the basis trading position value in blue. As you can see here, it's underperformed Bitcoin over time, but it's done pretty well in the sense that you've made money, and I think you even outperform the general S&P 500 stock market. So you beat a lot of investors by doing this strategy, and you're not taking very much risk when you think about it in terms of price risk, right? Basically, you're just collecting funding over time, and eventually, and usually that goes up because people are perma bullish crypto, especially in bull markets. People will take on tremendous leverage in order to go long because you can make a lot of money for doing so. So you can see here, they made the chart and they give a description of it. Holding Bitcoin performed better, but basis trading had nearly 90% less of a drawdown, which is the decline from historical peak compared to Bitcoin. Both strategies had strong USD denominated returns. So in the past year, 19th of May 2020 to 19th of May 2021, basis trading resulted in a 103% return with a max drawdown of 0.3%, whereas holding BTC resulted in a 297% return with a max drawdown of 40%. So for some people, this will be attractive. You haven't made as much, but the drawdown has been very minimal. And so that that your money is just slowly going up over time. I mean, that was in the midst of a bull market. Of course, as you can see here, you've had down periods, especially in 2018 when there was a bear market and the perpetual futures price was way below the spot price. And at that point, if you're still shorting the perpetual future, you're having to pay a funding rate for doing so. But if you just kept holding on, eventually you made money over time. But this isn't specifically what I wanted to talk about. I wanted to talk about the leverage strategy, which looks way more appealing. So as you can see here, you perform way better if you're using 2x leverage to perform this strategy. So the 1x leverage strategy is, I'll just give you an example here. Say you have $100, $50 of it is Bitcoin and $50 of it is USD. So you hold the $50 of Bitcoin and then you short $50 worth of Bitcoin perpetual futures contracts. And that's your 1x leverage strategy. But your 2x leverage strategy would be to hold entirely Bitcoin. So you'd hold $100 worth of Bitcoin and then short $100 worth of Bitcoin perpetual futures contracts as well. As you can see here, it's outperformed Bitcoin since the start here, which is in early 2016. Now this backtest ended in May of 2021, but if we go to this funding rate aggregator website here, we can see that generally, most crypto markets out there are generally just bullish over time. If we see here all time, we can see that the funding rate is generally above zero. I mean, there are some markets where it's not, where it is negative. I mean, this is just on Binance. There are other markets that you can do this on as well. But we can see here people are just generally bullish on the price of crypto. And it's not only just Bitcoin and Ethereum. It's like Bitcoin Cash and XRP and EOS and Litecoin, which is funny to me. But if we just click on this graph here, we can see that generally the Bitcoin USDT funding rate is positive. Zero is this like line here. We can see it's generally positive. We've had, a month or two where it's been negative. So in like late 2019, early of 2020, January 2021, and then quite recently here in November of 2022 as well. But we can see people are generally bullish, and that leads me to believe that the 2x leverage basis trading strategy would have continued to outperform Bitcoin since the end of this backtest in May of 2021. And I don't think it would have had much of a drawdown as well. Pretty much you can execute the 1x leverage basis trading strategy anywhere. So, like Binance, Kraken, Coinbase, pretty much any perpetual futures DEX out there. But there's only going to be a few places where you'll be able to execute the 2x leverage basis trading strategy. So again, a lot of these centralized exchanges will probably let you do it. Like Binance, for example, you can use Bitcoin or Ethereum as collateral. Same as with BitMEX as well. But in terms of DeFi, not that many places actually allow you to use exotic collateral. Most perpetual futures dexes will use like USDC or DAI as their base collateral there. One exception of this is Drift. So you can actually use Solana as collateral here. So you could obviously execute this strategy on Sol markets. And I believe Mango Markets offers you the chance to do this as well. So there definitely are risks to executing this strategy. So just generally, if you're doing it on a DEX, for example, you have smart contract and user interface risk, blockchain risk, Oracle risk, liquidation risk. And some of these risks also exist on centralized platforms as well. So don't think it's just DEXs that you might have a problem doing this on. And so just generally as well, if the funding rate goes against you for quite a while, this could eat into your profits. So as we've seen here, it went against you in early 2018. And if we have a strong bear market, it could go against you as well. I think a good way of knowing when to turn off this strategy is just looking to see if Bitcoin is below the 200-day moving average. And when it is, you know that we're in a bear market and you can just switch this strategy off. And lastly, just remember, for it to be worth it, the returns from the funding payments must outweigh the fees and the slippage that you're actually taking. So if you're trading size, it might not be worth it to trade on some of the lower liquidity dexes due to fees and slippage that you're going to eat. Generally, places like Binance and BitMEX are going to be better for executing strategies like this. So that's it for this video. I hope you enjoyed. Make sure to stay tuned for the rest of the series. Thanks for watching, and make sure to subscribe for more videos like this one.